This is Randy Finney with the right side of the chart, and this is a closing market wrap for Thursday, January 17th, 2019. I'll keep this one pretty brief. It's more of a follow-up to the video I did this morning, although that was for subscribers only. I covered the broad markets, futures, and then I also covered some developments in Treasury bonds, which sort of mesh with what I'm seeing in the broad markets as well as far as technicals go. But what we'll do here is take a quick look at the futures. Now, at the time this morning, I had mentioned that we had broken down, finally had a breakdown below those trend lines, but that it was very lackluster, not impulsive. You want to see a breakdown or a breakout, impulsive selling action. Now, the breakdown did happen before the markets open, so you're not going to have super high volume. Most of the volume comes in here when the markets open. But at the time, when I did the videos, the NQ. Now, I should make mention first, we're looking at ES right here, the S&P 500 E-minis. But at the time, NQ was backtesting its comparable trend line. And so at that point, I said, well, that was an objective level to have a reversal on the backtest. Or however, I had mentioned at this point, and you can see there's still the line I used this morning, that ES had not yet backtested. So I said if ES goes on to make a backtest, which is a possibility, would go in backtest here. And what that would do, since NQ was already backtesting at the time, it would pop NQ back above that trend line. And so basically that's all we have. We zoom in here. Let's zoom out real quick first. Take a look at this 60-minute chart. There's the wedge. There's the big 2673-ish, or we'll call it 2627 level, resistance level, and you can see we popped just above it a little bit and made a perfect, almost a perfect back test. And you can see these candles. Let's see, they're not showing great. There they go. So we tried to. There was a ramp. There was some fake news that came out. The algos went crazy on it, talking about White House softening up on the trade wars, and then they later on. I don't know if this is all true. I saw it in the trading room. People posted something that it was fake news. White House denied it, so you can see they were faded right back below there, and now 1, 2, 3 consecutive candle bodies testing below. So that's ES, and let's zoom back out a little bit. In the divergences, I also mentioned this morning that on the back test, if we had plenty of room to keep the divergences intact, so they're still there. So not a lot has changed, virtually nothing since the last few days, other than we do have the breakdowns now in a back test. So they're either going to play out or not. We broke down. We also hit support right there when we reversed at that 25.98-ish level back test. And so now I have to move the line. This morning I had it down. I talked about a 3%, 3.6% downside to that target now, 2250 or so. But we'll have to change that line a little to where we're at right now. So as I do the video, now we're talking a little bit better. If it gets there, that's about 4.4%. But it'd really be nice to see it happen soon. This market has been very resilient. Like I said, it's corrected more in time recently than price, and even the sideways consolidation has been a slightly upward one. So, but that's it. So we finally have taken out those trend lines off the lows on the 24th. Let's jump over to NQ real quick, and then we'll look at the index tracking ETFs. So there's NQ. You can see that's where the line was right this morning when I did the video after the market opened. At the time, we're looking about a little better than a 4% drop. If we come down here to my 64.1050-ish target, we're going to have to raise that line a little bit now because we popped up in there, but we'll call it, let's say, probably closer to 5% at this point. There it is. Yeah, almost 5%. So again, we're looking maybe 4 or 5% pullback if it comes, and it's still, to me, priced into the charts. So divergence are there. The momentum is to the upside now. And again, so we had so far a breakdown, unimpulsive, lacking volume or any impulsive candles, a pop back above there. And yeah, it looks like we're still trading above that trend line a little bit on NQ. So this one will have to be continued tomorrow. The futures, I'm sorry, that was futures. Let's look at the ETFs. Let's just stick with the 60-minute charts right now. So we're starting to get some pretty clean divergences now on the 60-minute charts of the index ETFs, which we didn't have before. For a while here, we've had some divergences building in the futures, but not the index tracking ETFs. So this is what IWM looks like. Divergence still needs to be confirmed with a bearish crossover there. Let's look at SPY right there. There's your divergence. And SPY has back, just like ES, SPY has made a back test here, almost a perfect back test. Again, this is a trend line, comes off the lows right there in the market, and you can see it come in, capture all those reaction lows. As we come up here, you can see a breakdown today and a back test so far, while we continue to diverge. So one more to look at, QQQ, and same story. We have a little bit different trend line off the lows on the Qs with that reaction low. Yeah, this one might come into play like this. If you exclude that one little candle right there, you can come in and capture quite a few reactions as well as these recent reactions here. So those are levels to watch. And of course, not a whole lot has changed on the big picture. What I will point out, let me just point this out, that we did have, again, that period of consolidation here recently. We traded sideways, and we broke out of that. So far, we had an impulsive move on Tuesday. Yesterday was a consolidation day, and today we moved above there. So we took out those potential bearish topping candles. We didn't have any red confirming candles today, but the story remains the same. There is a tremendous amount of overhead supply. By supply, we're talking about resistance, price action. A lot of trades occurred in this range here. And remember, this is the, my bounce target range here, and nothing's changed. I still, whether we come up a little more or not, expect something along the lines of this. But the more stretch we get on this at this point, again, we've consolidated a little bit in time, but not so much. It's not like we had a multi-week consolidation there. So we're getting pretty stretched, and so when we get a correction, it's probably going to be pretty swift. I think there's a lot of one-sided trades right now, and so I think it'll be a pretty swift pullback, and that might be a time to, again, recycle back into some longs and maybe position for the next swing up there, probably a run at and a pop above the 200-day. So there's SPY, but again, the big picture is a lot of overhead resistance, and that's not changed, and nor will it change. Even though we're at the bottom, we're still right around the bottom of where this was the important support level all last quarter, and that's where the waterfall's selling. So again, this is Groundhog Day. I'm doing these videos recently. We were a little below it here. We're really still right up to the bottom of that support or resistance zone there, the bottom of that key former support level, now resistance. QQQ, same story. Qs have been pretty strong, pushing up here. This is just one chart. I can add lines all day long on this chart, all types of levels. We can look at Fibonacci retracements. There's a fib cluster. We took out this first fib cluster. We consolidated around it. There were 3 different fibs there. You can see the colored lines where they measure, lining up to the reaction points that they measure off of. But now we're coming up a little bit more upside to hit this other fib cluster. It looks like the 50 and 61%, 61.8 fib from the entire move off the top, the 50% retracement, and then this first kickback reaction high right there. So another fib cluster, and on SPY, I imagine we have some as well. There we go. We have two fibs, a 50 and 61.8 of these two. Really, I just only have the 2 fibs here because that's all you really need. We have the major top right there, and then this key triple top here, all roughly give or take around the same. And so right now we're coming, in fact, we only had 2 on that set of fibs, 2 fib clusters right there. This one we consolidated around, and now we're up to this one here, and again, price resistance as well. So that's it. Let's see what the futures do overnight. They certainly are getting to the point where they have the potential to burn through the divergences, can pop through resistance, but we'll see what happens. Either way, the market is getting stretched right now, just like we were very stretched to the downside. The more stretched the rubber band gets, the sharper the snapback is when you get it. So stay tuned, and we'll do another update tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.